Hello guys and girls, and welcome to the first official AFT recap. As promised, all advanced Falcon Trader refinement entries will be posted in this section, and it is a concentrated place for you to level up. Now, of course, every single one of you are at different stages of your journey. This is why having the foundations set in place at the highest level is going to be so much smoother and easier for you to be able to implement these positions. So in this recap, I'll be covering two positions for you: pound yen short and euro Aussie short. This is a great example of one of those times where previously I may have not taken a trade for, let's say, a week or so. And it's trades like this that would have just gone under the radar. Very, very high quality positions in the right moments. Now, Euro Aussie, slightly lower quality than pound yen, which I'll explain in the recap. However, it's a great example of just added layer of these trades. Now, in total, we're talking extra 7%. It could have gone on for a lot more. And it's those differences, right? You add in a few of these AFT entries in the right moment, it can be the difference of an extra 7, extra 12, sometimes 15% and more for the month in the right moment. So I'm super excited for this section, and I really want you to be as intentional as possible ongoing. So this is going to be your level up. This is going to be the part in which that you should focus on understanding everything else to put yourself in a position when you can start executing on these trades flawlessly. And it's not going to happen overnight, which is why we said Q3 is the testing phase, and so many of you already have been able to implement this into your trading. It's phenomenal to see. But for those of you that are not there yet, you have something to aim towards. You should be incredibly excited knowing that once you've got everything else dialed in and you start adding these trades in, watch your account scale, watch your funding assessment scale. Everything is going to connect because everything is connected to everything else. So do the work and put yourself in that position. Without further ado, let's get into the first official AFT recap, starting off with pound yen. So starting off with pound yen. So why was we looking at pound yen? Well, pound yen from a higher time frame point of view, and we're going to start as always higher time frame so you really understand where and when we use this. So higher time frame looking at pound yen. Why were we looking for the shorts? Well, we can see in this area, overall weekly time frame, I've seen better weekly time frames, but when you zoom out, you understand this area of value is likely to stall. So anything above this structure here, we anticipated will probably stall for a while to warrant a big sell-off. So that's natural. Now I've just removed that ray line for simplistic reasons. But when we go a little bit more granular, we can see that we were getting this double top that just ever slightly broke. So as you can see, we pierced just above, then we started to sell off, we retraced aggressively, and this is when it started to get a little bit messier in this consolidation. But what you can do is still benefit from the range plays. So if we now go granular to the 4-hour chart, we had this mini double top. Now I wouldn't say this is majorly significant because it's just a double top. It's not rejecting this area or the high. So we have to kind of factor that into our decision making when taking these trades. So it moves more onto the slightly more valid positions, right? Versus something that would be much higher quality at the top or bottom of structure. But still, you have to understand where we're looking to play. When you're looking to play, let's say we've already had a rejection and we're looking to take this from this area here to this ray line, it still has some high qualityness to it because it's what you're looking to do. You're looking to play the range. So it's highly likely in this scenario, if we play this back, that we could deal with a situation like this. And this is going to link into the management that's going to help you out. So if we're looking at this from impulse up, we could well and truly see this as a continuation. So naturally, what do I want to do? Already I'm thinking about, I want to be a bit more aggressive with my management as we get towards that low, because chances are we could get this as a 1, 2, 3 and we're moving to the upside. I already factored that into decision making. Now we go granular and we start to look at the trade itself. So we get the rejection at the top, we get that high test candle. You could almost say this was a valid trade to take, so we'll cover that one really quick. This is more on a valid trade, but it's just one candle. Now you could be playing this as, right, I understand the value area is not the highest of quality, but it's still a value area. What do we get? Push up, bullish candle. We also have the 1, 2, 3 to finish off the move. We get the high test, a bit of a bullish high test, but could it be a premature evening star? If that was a thought process and you was able to take the entry and you stop cropped it, well, at the top is about near enough 50, but you could have got away with maybe about 40 pips. You'd be able to manage that one a little bit better. You probably would have ended up with about 6.4 if you held for the whole trade. So the trade was definitely there. But what we was looking at was we got this push down and we was looking at this correction here. Now this was actually in the live sessions. For those of you that are in FX Live, you'll understand and remember this. Not that long ago we was looking at this position. Now if we work our way down, we was essentially looking for this in the live session. We was literally ready to enter on this candle here. So if we just get this on before we look at the actual trade itself. So we was looking to enter here and we was watching this live to see if we actually get a rejection. It was looking very promising on the 15. Then we was going to go granular to the 5 to actually filter that down. However, it closed a little bit more bullish. So if we zoom in, you can see. So it was that one there. That at the time was looking like more of a rejection and we was ready to go for the 1, 2, 3, take the risk entry, stop above here. I explained to stay out of the position for the obvious reason. We then would have, again, it would have been a private example of rushing a position, being tagged in, taken out for an unnecessary loss. We knew there was this, left shoulder, right shoulder, but it doesn't always have to hit that area. The trade would have been relevant, and if we would have been tagged in into something like that, you would have been at least been able to manage the trade. Coincidentally, it did actually play out for the left shoulder, right shoulder kind of rule, in the sense that it will at least go equal to, and you can see we literally wicked towards the right shoulder before it then sold off. There was another entry, not the kind of one that I would want to take, and the whole point of these recaps in the AFT section is to explain. I'm going to show you all of them, and just so you understand slowly and surely how to avoid certain ones, and ones that they kind of make sense but you wouldn't take at scale. So if we go to the 5 minute now, you'll see. So we have the original one at the top, which the 1 hour entry that I spoke about. Then we get this one, which was, I believe, about 2 a.m. Yeah, so this was the one literally the night before the live session on the Thursday morning. This one, for those of you that took this, was brilliant. So this would have been, I would have been all over this one, but again, I was asleep. It is what it is. There's so many trades, you don't even need to worry about that. Call it a 25 pip stop. You would have at least walked away with roughly about another 2%. Right, nice. Highly doubt you would have held through that one. I mean, you would have had to have just locked in 0.7 or 0.6. If you was being more lenient with it, possibly, right? So let's say you would have walked away with top end 8.6, but being more realistic in the actual scenario, call it a couple of percent. So still added a couple of percent within not a long period of time at all, right? Which over the month, it really does add up. So you understand, we have entry 1 up the top, we have entry 2, refinement entry here. Then we were looking for this entry, didn't have it, push to the upside, push back down. Then we look at this part. This is a little bit early, and again, these are the ones, if any of you took this, it's forcing it. It really is. You don't want to be taking these trades, because listen, we pushed above, I get it, we pushed back in, but it's borderline. If you kind of put price through this, it's kind of through it. This is not the type of entry that you want to take. That could have turned into so many things that would have been complex. So for example, imagine, I know this one actually worked out, but it's just a bit early. I'd rather you avoid trades like that. These ones are fine. These are lovely. Top of the structure in terms of, I don't mean right at the top of the larger double top, but it's high up in the run is the point that I'm making. And then you've got this that could have just tagged you in, tagged you out, and been something really messy, and you wouldn't be happy to, let's say, take that on a 10k position. So if you're risking 10k to be tagged in there and tagged out, it's just not going to run, and it's not going to be the type of ones that you want to look for. So even though it played out, leave that one alone. Now we look to the next entry. Why was this one so attractive? Because we was already alert and ready for this trade to sell off, which is what we was looking at in the live sessions, right? So we then factor this in. We've now got a structure that started off to look clean, didn't end up clean, equaled to the left shoulder here, as you can see, so it wicks to it. So there's a high chance price doesn't need to return back towards this area again, because at this point, if we go to the 4 hour chart, look at how we were looking. It's important that you understand all the time frames. So at this point, we've then got rejection, push to the downside, follow through, strong 4 hour candle, tiny bit of a wick, but nothing too crazy. So the chances of playing this to the downside is high towards this low now. Then we go back to the 1 hour chart. You can see that we've got that full retrace. We've got the sell-off. We completely break through and clear that with a very strong candle. It's important to not understand this picture here. So we now got head and shoulder into a clean break. We've broken below this low with conviction. And then we start going to the 15 minute. We start to refine this flag. And as you can see, very nice indeed. We're trading below the low. And then we go to the 5 minute. What I liked about this one in particular is the fact that we've got, yes, it's like a 2-touch, but you've got the squeeze there. As long as you've got your stop above this area, if I get it exact, it's above, you got just over a 20 pip stop, and as you can see, if I just play this back, so you can see the entry, it was this candle here. Now I want to show you what I would have done better, because again, I fully expect to improve over this quarter, next quarter, especially into 2023. So this one should have banked a little bit less, but as you can see, full retrace, that's what I was waiting for. This is the exact thing that I was telling you guys on the live session, which was here. We was waiting for that rejection. We didn't get it. In this scenario, we break the low, we get it. So this price action here should have already alerted you to see, well, if we break that low and we form a continuation, you know I'm a huge fan of these flags below the low of a structure. They tend to play out very, very well. So for this particular one, I just would have gone a bit of wider stop. This entry here should have been a little bit lower, so it would have gone maybe about a 23 pip or 24 pip stop, which the percentage would have been a little bit less. This one could have tagged me in, tagged me out, and I could have saved myself from an unnecessary 1% loss just by being slightly less greedy. So again, just a tiny bit of refinement to that, but again, I understand it's not always going to be perfect because it's on the 5 minute, it's happening very quick and very fast, and that's natural for that to happen, but it's important to highlight those areas. So just go a little bit lower and you'll be fine there. So with this one, let's go back to the 1 hour chart. So we're going to go management here. This one was fairly simple because it just literally plummeted towards this low, which I expected. Nice close. And then as we started to trickle towards these areas, I wanted to be more aggressive for the reason of zooming out and going, well, this isn't a valuable area comparison to the highs up the top. And if this is going to turn into what I explained as a impulse up continuation for a 1, 2, 3, well then why do I want to leave a lot of profit on the table? I don't. I want to be in and out and understand exactly what's happening here. So I was aggressive with it, moved it down 5%, and then as we trickled next, I think it was about 3-4 hours after, it was that one there, took me out. Fine. Happy with that, can walk away. If it goes a little bit lower, I'm still happy with the decision that I made, because I believe we went up to about here before we dropped off. So yes, it went on for the high time frame direction that we anticipated and expected. However, I would have had to have left my profit at about, you got to factor in spreads as well. What time was that? Yeah, exactly. So no, that would have been okay. But call it, I would have had to have just known that I need to leave it at 2% because I'm holding the whole trade. The reality is, at the peak, it got to 7. There's no chance when you're trading more money that you will allow these things to happen. So part of your entries, they have to have an element of realism in there. And it doesn't mean to be a realist and not expect anything big. It's just to understand what you would actually do. So across the board, I'm not going to penalise anything there on the management. I stuck to the plan. Everything's good there. Just the actual entry itself, if we actually look at it with a slightly wider stop, slightly lower down, would have taken about, call it 22, right? So would have got about there. So you're talking, it's a tiny little detail, right? We're talking 0.2%, something like that. However, it's important to actually look at that, because it's when you do those small details, you realize that does actually compound over the long run and will alter your decision making. For example, imagine you got sloppy. It was like, right, is what it is. I entered a bit earlier. I could have gone a little bit lower, but you weren't intentional, didn't want to do anything about it. Let's say the next trade or a week later, you take a trade like that where it's too tight from the same reason when you should have gone a little bit lower. You're tagged in and tagged out from just that small little detail. You take an unnecessary loss. You're then frustrated. You carry that emotion into the next day. You're then less confident going into the next position. The next position arises. You then question it. You hesitate, and it goes and banks you 9%. It's not about the 1%. You just costed yourself another 9% because you wasn't intentional with the small details. So if any of you thinking I'm maybe being a bit too picky there, I'm trying to explain why I've done this for so many years, and it's always made the difference when you refine the right moments. There's certain things you kind of just, look, it doesn't matter so much. Oh, I could have gone a bit of a tighter stop. This is more of an entry precision here that's important. And when we're talking about AFT, that's exactly what we're focusing on. So love the trade overall. Just would have been a little bit better with the entry. Happy with the profit management, was phenomenal. So that is solid. And just overall, beautiful entry. On a different day, I wouldn't have been involved in that position, right? So I would have walked away with 0 trades for the week. And it doesn't mean that was going to affect anything, because you can literally take 4 trades a month, 5 trades a month, and still end on 12%. However, this is a great example of those moments when I wouldn't have taken a trade for a week. there was an entry like this that would have missed. So I would have forecasted everything. I still would have been looking at everything the same. However, it just would have been a simple 5-minute entry that just would have gone under the radar. And that is the beauty and the power of what's happening here. So well done for everyone who got involved in that position, who understood that position, and hopefully you've taken away some valuable notes from just this very short recap. That is it from pound yen, 5% trade, happy with it. Now let's take a look at Euro Aussie short. Right, let's take a look at Euro Aussie short. So this is where I would, and until you've got consistency under your belt using AFT, this is the exact type of entry that you don't need to be taking right now. But I'm going to share it anyway because there's still some valuable lessons for you to learn, or either shadow trade. So let's take a look at it. So if we look on the daily chart, no surprise as to why we was looking for the sell. We can see we rejected. Typical structure playing out nicely where it catches trades on the wrong side of the market, pushes to the downside. You can see the very obvious range from here to this low that we were playing. Now you could say this is quite far into the run in regards to this low, yes. However, we could easily be going down to the actual correct base here. So in regards to that, we've still got a lot of room, a lot of percentage there. So that's not going to keep me out of any positions. Remember, it's important for your ego to not get involved there because you basically told yourself it's far into the run. But in comparison to what? As if what we know when it's going to stop. The goal isn't to know how far something is into the run because something can just keep going higher or going lower. The goal is, can I manage the trade safely in this scenario? And if I can do that, what numbers am I playing with? That is the thought process rather than always trying to predict this is far into the run. Of course, there's a big difference taking a 15-minute flag into that low. Of course, that is a no-go. However, when you've got this here and you might have a 9, 12 to 1, don't just look at it and go, yeah, but it's a bit far into the run, so I won't take it. That you'll miss a lot of trades. So we understand high time frame, nice and simple. 4-hour chart, as you can see. I was looking at two scenarios with this one. We're either going to get a 1, 2, 3, so this is section 1, section 2, section 3. We go risk entry for a structural play, or we're going to get a 2-touch with a push down and a flag. So if we look on the 1-hour chart, as I covered in the SMB, the only way I'll take this with a push down and a flag, if it's nice and clear. So what do we get? We get the push above. What I like about this one, and this is the key detail, so how this finishes this run is a 1, 2, 3. Now, the importance of this that I've mentioned numerous times, when we end on something like that, that can be a good indication that we're not going to get the third touch. And this 1, 2, 3 is the ending of the pattern, and then we'll just sell off from here. So that was kind of a bit of a clue to me. What I liked more so was that full strong retrace. We had cleared all of those candles when you zoom in. So we had cleared all of these candles, then we'd formed this flag, and then we started to hover in this area. So this is the key thing here. I'm not playing the 5-minute flag so much. That was the refined entry using AFT. It's more so this. The important part is that we broke above. We broke back in with conviction on that strong impulse. We then formed a flag, which you could say, oh, a little bit steep. I understand that. I'm following the structure of the pattern here. Then we go to the 15-minute chart. I was actually looking to see, right, is there a potential we could actually start to look for some risk entries in the morning, right? Price had already moved up about, 3 a.m., pushed to the downside. And then in the morning, as we'd broke here, this is the key part. Look at that. You're going to see this over and over again. And again, get the skill set first because this is a lot harder to get these entries when you haven't even mastered refining the 15-minute flag yet. However, what's going to happen is that you're going to have 1-hour push, bigger flag. It's going to start to break the structure. You might not find your entry as a risk entry. It might be too large for you to take, let's say, a reduced risk like this because you just might not be as comfortable taking a 47 pip stop when the risk to reward is a bit skewed. However, if we go lower than the 15 to the 5, what you'll find is this. This is an example of one that's slightly on the messy side, where you just break and then we will just essentially consolidate for a period of time below the structure. So what I'm playing here, guys, is the momentum of this. This is not important. This is just almost, think of it like this, almost giving us another opportunity. It's almost like the market is saying, look, listen, we've not gone yet. I'm giving you another opportunity to get in. I'm going to consolidate underneath the volume of this pattern, and then we're going to be good to go. And these, they move quite aggressively. So I set this with a reduced risk entry. I could have my stop just above that wick was important. So if you're wondering about, the top of the flag, bit of stop cropping here, as you can see, that's the consolidation. We can kind of box that off and see that for what it is. So this was just a typical London session trade tagged in about 8:05, and I just wanted to make sure my stop was above there. Could have gone a bit tighter. Now we go to the 1-hour chart, as you can see, nice and simple there. important detail. We pushed to the downside as expected. This is a type of one where I expect a little bit of aggression because all the volume's been built up from here. It'll consolidate and just drop out. So as we drop out, we pull back. It's at break even. Leave that one alone. And you don't want to manage it too quickly. Remember, using the 1 hour chart, not the 15 or the 5. You don't need to do that. And what I was mindful of is just to see when we kind of get towards this low or near it, what kind of rejections do we get, or do we just follow straight through? That's an important part. After we'd pushed down with this candle, moved to break even, it was nice and simple around 11 a.m. And then as we pushed further and then we retraced on the 4 hour chart, and this is key, this is when I wanted to be a bit more aggressive, look how we start to finish there, right? So then I locked in a little bit of profit, 2%, I was happy with that. And then this was a good indication to me that, listen, if we just go to here, at this point, a retrace like that, it's normally a strong indication we're going to come back up. Otherwise, we would have seen a follow-through all the way to this low. The fact that we near missed it gave me an indication maybe we're coming up for a third touch and something a little bit wider. So that's why I wanted to be more aggressive. And the fact that we're getting closer towards this low, definitely. It's not really high up, let's say. We're not dealing with a flag up here. We're down here in comparison to this low. So that is the reasons for that. And I wouldn't do anything different there. This I would grade as, this is not as good as, let's say, something like pound yen, right? However, a little bit more trickier to take. Is there any pros and cons to this? More chance to be, let's say, tagged in and out and become part of something complex? Yes. However, there was context to the trade. I understand those risks. And just overall, the position was just, it's not the ones that I want someone who's just starting to use AFT to start to implement, put it that way. But it's important that you understand it. So very simple. What was that, like 6 hours in total? 1, 2, 3, 4, 5, 6. Yeah, just over 6 hours. Nice 2%. And that's the difference sometimes. Just a small little trade, nothing too crazy. On a different day, that's 4%, 5%, sometimes 7%. And you suddenly start to realize that these numbers that you've got in your mind as to what you need to be trading for, let's say, the golden number or to be able to quit your job, you realize, oh, hold on a minute, 4% is very achievable. If you only need, let's say, 5% a month on a 100k account to quit your job, well, you realize how simple that is, right? We're the 1st of August. 2%, very, very simple. And again, if we look at the pound yen trade, 5%, you start to realize these would have been two trades that I just wouldn't have taken. And I still would have taken other trades. I still would have been up. So, for example, if I didn't take the pound yen trade, what would that have put me for the month? Without AFT entries, maybe like 8%, something like that. So it's given me, like another 6.2%. So that just shows you, and there were missed trades in there as well, like 15% on of missed trades. But that should show you and demonstrate to you that you don't need AFT to be successful. You can already be successful within the remit of the strategy that we had. But once you know your stuff, once you know what you're doing, you can see how this just complements so much. And these are trades that, in my opinion, have not even worked out. Imagine when they commit to their runs and you're in. These are ones that are not even 10-pip stops. So it just goes to show you the power of what's here. Once you start knowing how to implement them, it's not going to be difficult to hit those numbers that you're looking at. Don't focus on the numbers, but they're just going to happen as a side effect of getting involved in these positions. Because if you look at something like what I took with a 20 pip stop that could have been a 10 pip stop, there's a difference between a 4% trade, literally within 6 hours. And what does that do for your month? What does that do for the start of your confidence? All of these things, they do compound. So I want you to be as intentional as possible with this recap. I'm really, really glad that you've likely learned a lot of important details here. Now it's about how are you going to apply it? What kind of data are you actually gathering right now for Q3 as a whole? Because think of it like this. The more you know, the more trades you've taken safely, the more data you've got to work with by the end of this quarter. You literally set yourself up for Q4 to seriously level up. That can be the difference of you starting to trade the capital that you want to trade and literally knowing how to implement these trades flawlessly into your plan. Imagine that. You can then do that on 100k, even 200k, and you're banking an extra 10% a month. It's different, extra 20 grand a month. What does that do for your life? This is what I mean. Start to then value why the basics are so important, because then you can implement these without even a second thought. And that is the confidence that I need as many of you possible to have if we're going to hit those goals, which we are. So we're going to keep pushing you. Excited for it. Let me know any feedback. I really enjoyed this, and honestly, this is the start of something truly special. More and more content coming in the advanced section. Just keep doing the basics well, and you will all get there.